Every year, the global banking industry loses hundreds of billions of dollars due to inefficiencies, fraud, and security breaches. Transactions that should be instantaneous are slowed by outdated infrastructure, while cybercriminals exploit vulnerabilities that have existed for decades. But what if there was a way to revolutionize banking, making transactions near instant, eliminating fraud, and optimizing financial models beyond anything currently possible? Quantum computing isn't just an abstract theory anymore. It's here, and it's poised to upend the financial system as we know it. Banks today rely on classical computing systems that, while powerful, are still bound by the limitations of binary processing, ones and zeros, yes or no, black or white. Quantum computing, on the other hand, operates on quantum bits, or qubits, which exist in multiple states simultaneously. This ability to process vast amounts of information at speeds exponentially faster than classical computers means that banking algorithms, security encryption, and financial modeling could all be radically improved. The inefficiencies in current banking systems are staggering. Wire transfers take days, riddled with intermediary verifications and excessive fees. Fraud detection systems struggle to keep up with evolving cyber threats. And financial models for investments are limited by the brute force capabilities of classical computers. The more complex the calculations, the longer they take, creating bottlenecks in an industry that thrives on speed and security. Quantum computing is set to change all of this. One of its most significant advantages lies in optimization. Banks handle massive amounts of data, from transaction histories to risk assessments, and traditional computers are forced to analyze these data points sequentially. Quantum algorithms, however, can evaluate multiple scenarios simultaneously, producing results that would take classical supercomputers centuries to compute. For financial institutions, this means risk assessment models that are orders of magnitude more accurate, allowing for smarter investments and more stable economies. Security is another area where quantum computing is poised to disrupt banking. Current encryption methods rely on the difficulty of factoring large prime numbers, a problem classical computers struggle with, but one that quantum computers can solve almost instantaneously using Shor's algorithm. This means that once quantum computers become powerful enough, existing banking encryption systems will be obsolete. However, quantum cryptography offers a solution: quantum key distribution, QKD. This method leverages the principles of quantum mechanics to create unhackable encryption keys. If a hacker attempts to intercept the key, the very act of observation alters the data, making the attack detectable and rendering the key useless. Some banks have already begun experimenting with QKD to future-proof their systems against quantum-enabled cyber threats. The speed at which quantum algorithms process transactions could also reshape payment systems. Some of the biggest financial institutions in the world are already investing heavily in quantum research. JP Morgan Chase has partnered with quantum computing firms to develop quantum-based fraud detection models that predict fraudulent transactions before they even happen. Goldman Sachs is working on quantum algorithms for risk analysis, seeking to optimize complex investment portfolios with far greater accuracy than is currently possible. Even central banks are paying attention, as the potential for quantum technology to revolutionize currency systems becomes more evident. The implications extend beyond security and transaction speed. Quantum machine learning could give banks an almost predictive capability when it comes to market trends. Instead of relying on historical data to forecast financial shifts, quantum algorithms could analyze real-time market data and millions of variables at once, identifying patterns that are invisible to traditional AI systems. This could give banks an unprecedented edge in trading, making markets more efficient, but also potentially disrupting the balance of financial power. One of the most groundbreaking real-world applications of quantum banking is already unfolding. The European Central Bank and Bank of Canada have been running quantum simulations to model economic scenarios with unprecedented precision. By leveraging quantum algorithms, they can predict the impact of inflation, interest rate changes, and global financial crises with far greater accuracy than classical models. The ability to simulate millions of economic possibilities in seconds means that governments and financial institutions could anticipate crashes and gain access to quantum-powered financial models. Will the wealth gap widen as those with the technology outmaneuver traditional investors? research institutions can afford them. This raises concerns about monopolization, where only a select few entities control the financial quantum landscape, dictating the future of banking without competition. Still, the momentum is undeniable. The world's first quantum-secure bank transactions have already been tested successfully, and quantum computing firms are partnering with financial